Have you ever heard someone say, investing is only for the rich, or the stock market is too risky for beginners? These are some of the most common myths that stop people from taking control of their financial future. But what if I told you that investing is more accessible than ever before? So in today's episode of LG Mindset Podcast, we're going to reveal the biggest myth about investing and reveal actually the truth about how to make it a tool for anyone who wants to build wealth and financial security. So let's dive in. So the first myth is investing is only for the rich. Well, the reality is that investing is not just about how much money you have, it's about how you use it. Many people believe that only those with large sums of money can afford to invest, but that's simply not true. With modern tools and platforms, you can start investing with as little as $5. This means that almost anyone can begin building wealth regardless of their income level. For example, you have many brokerage apps like, for example, Robinhood, TradingView, Trading 212. There's so many things that you can invest and spare change or small amounts without needing thousands of dollars to start. These platforms have made investing accessible to people. Why does it matter? Well, the earlier you start investing, the more time your money has to grow, thanks to compound interest. Compound interest allows basically your earnings to generate even more earnings, creating exponential growth over time. So starting small can lead to big results if you stay consistent. So the practical steps are that you need to set aside a small amount each month to invest, gradually increase your contributions as your confidence and income grow. So you need to really focus on building the habits of investing regularly to see long-term benefits. So for example, I just go to, let's say, TradingView. I want to invest my money, so I just buy an action of, let's say, Tesla. So what I do is that every single month, I put money in it. So let's say I want to put $50. I just put it, and that's it, and I just wait. Or you can also put like $100. But the thing is that it needs to be consistent. The second myth is investing is too complicated. Well, no, many people avoid investing because they feel it's too complicated to understand. However, investing is much simpler than it seems, especially with the tools and resources available today. I just learned all of this on YouTube and talking with people. That's it. And it's so easy to understand. So basically, the basic concept like index funds and ETFs allow even beginners to get started without needing deep market knowledge. For example, index funds track major markets like the S&P 500, making it easier to diversify your investments and reduce risk without constantly managing your portfolio. For example, ETFs work similarly and can provide a balanced portfolio in just one purchase. Why does it matter? Well, investing doesn't have to be time-consuming or complex. Modern platforms and robo-advisors automate much of the process, helping you to make informed decisions without needing advanced skills. Sometimes I even use, I know it's not really a good thing, but sometimes I really use ChatGPT to give me information about, for example, a specific actions or something like that, because a lot of the time he says the truth, but I always tend to verify the news. So basically, these tools simplify investing, making it approachable for beginners. The practical steps are you need to focus on understanding the key terms like diversification, risk tolerance, and compound interest. If you understand all of this, you can invest. You should really start with low-cost index funds or ETFs to build a strong foundation. So first, don't start with, for example, $500 and you're going to invest it. No. Start with low cost, okay? And there are so many ETFs that, like, there are ETFs that have like a value of $200 and then $500. Like, it really depends. It's so diverse that you have so many possibilities. So the third myth is investing is way too risky. While all investments carry some risk, this risk can be managed through diversification. We talked about it. Proper research and understanding your time horizon. It's very important to understand the time horizon because it will always be different from where you live. Investing doesn't have to mean gambling on risky stocks. For example, wild stocks can fluctuate. Bonds and index funds are lower risk. Options can provide stability. So combining higher risk and lower risk assets help create a balanced portfolio that matches your risk tolerance. It is so easy. And it matters because avoiding investing entirely can be riskier than participating. So keeping all your money in a savings account means losing value to inflation over time. Think about this. Investing provides an opportunity for growth that savings account cannot do. So assess your risk tolerance and build diversified portfolio to minimize potential losses. And you need to also spread your investments across different industries and assets types to reduce risk and maximize stability. The fourth myth is you need to be an expert to start investing successfully. Not at all. Successful investing doesn't require expertise. It requires consistency, patience, and learning as you go. So many people believe they need a degree in finance to succeed, but that's far from truth. For example, many wealthy investors started with no formal education in finance, but succeeded by sticking to simple strategies like dollar cost averaging and long-term investing. Dollar cost averaging involves regularly investing a fixed amount, regardless of market conditions, which reduces the impact of market volatility. That's why we talked before about it is very important for you to have a fixed amount every single month or every single, for example, weeks, etc. You do however you want. Taking action, no matter how small, creates momentum and builds confidence. So learning through experience is often more effective than waiting until you feel full prepared. Because I'm sorry, like in school, we just learn all the theory. But do we learn to basically practice this? No, we don't. You need to really follow proven strategies. I also read a book that is so good. It's The Intelligent Investor. And also you can read Rich Dad Poor Dad, which really explains about real estate. That is also interesting. I know it has nothing to do with what we are talking about, but it is very interesting. You can again use robo-advisor for automated investing. That really works also. Focus on building habits and learning through practice rather than aiming for perfection. And the last myth is you can get rich quickly through investing. Well, the reality is that building wealth through just investing takes time and discipline, like a lot of time. I'm talking like about a few years. So short-term trading may lead to gains, but long-term strategies often produce more consistent results. For example, I'm sure you heard of this, but Warren Buffett, one of the world's richest investors, built his fortune through patience and long-term value investing. He focused on businesses with strong fundamentals and held onto his investments for decades. Why does it really matter? Well, unrealistic expectations can lead to risky decisions and financial losses. Sustainable investing focuses on gradual growth rather than overnight success. So patience and discipline are the key to long-term success. So you really need to set realistic goals, monitor progress, and resist the temptation to chase quick profits. Because when you're like investing, you cannot make a lot of quick profits. It doesn't work like that. You really need to focus on building wealth steadily rather than taking unnecessary risk. So you really need to basically focus on the long-term process than the short-term process. I will also talk in another episode about trading because we have investing that is the long-term investment, and then we have more trading that is more into like the short-term investment. It's not really investment, but it's there are similarities, let's say. But I will also talk about trading so that you can learn the differences between really investing and trading. So, investing is not just for the wealthy, the experts, or even the risk takers. It's for everyone willing to learn and take action. If this episode helped you rethink about investing, share with someone who might need a little boost to get started. So stay tuned for more insights and strategies in the future episode of the Elder Mindset podcast. Until next time, keep growing and keep investing in yourself. Bye!